Namaste, this is Dr. R. Sridhar, Assistant Professor of Commerce, Government City College, Hyderabad. Today we will discuss about the cash flow and fund flow statements. In the financial statement analysis, these two statements, that is the cash flow statement and fund flow statements, are the major techniques of financial statement analysis, which will give us insights into the financial aspects of the organization. Let us first look at what is fund cash flow statement. Cash flow statement is the actual movement of cash into and cash out of the organization. The cash flow into the business is called as cash inflow or positive cash flow, and flow of cash out of the firm is called cash outflow or negative cash flow. Here there are different cash flows in the organization, and if a cash flow which results into the business, we call it as a positive cash flow, and if the movement of the cash is going out of the organization, then we call it as a negative cash flow. And the difference between inflow and outflow of the cash is the net cash flow. Always the net cash flow should be positive, so that the firm's business, the liquidity position is well. Then what are the objectives, why the cash flow statement is prepared? As we know that the cash flow statements form the part of the final accounts, that is trading account, profit and loss account, and balance sheet, and we also include cash flow statement for the final accounts. Here we look at what are the different objectives of cash flow statement. The first one is to determine cash requirements. Cash flow statement will help the businessman to estimate what is the cash that is required at a different levels of the time periods, as it gives you a clear picture about the various cash inflows and cash outflows, and based on that one can estimate the cash requirements. The second one is to determine cash position, inflow and outflow. What is the exact cash flow position of the organization can be known by preparing the cash flow statement, as it gives you the details about the inflow and outflow of the cash. Efficient and effective cash management. This also will help the management in emphasizing control over the cash movement of the cash in the organization. That is, it is one of the effective technique for the cash management, as it gives you the reasons, or it can be easily to identify the cash inflows and outflows. We can efficiently control and utilize the cash available in the organization. And the next one is to identify liquidity position. In order to identify the liquidity position, what is the position of the organization, what is the net cash flows that are available for the organization, it only will be known by preparing the cash flow statement. To help in dividend decisions, the dividend decisions will result in the movement of the cash. If the dividend is paid in the form of a cash dividend, then certainly one should know what is the impact of the dividend payment on the net cash flows of the organization. This is also helpful for the organization by preparing the cash flow statement. Provide information in proper manner. As the cash flow statement gives you the headwise inflows and outflows, it gives you the complete picture about the activities of the organization. These are the different objectives which can be fulfilled by preparing the cash flow statement. Then we look at what are the various cash flows, or what are the different heads under which the inflows of cash and outflows of the cash are identified. There are three major heads under which we need to analyze the cash inflows and cash outflows. The first one is operating activities, second investing activities, and third one is financing activities. Operating activities are the activities which results in the general course of business, that is a general activity of the business, that is it may be production, it may be selling, whatever what is the nature of the business activity, what is the main course of the activity, that what we call it as a operating expenses. Here with regard to the operating activities, what is the cash inflows, that is the cash flows generated through operating activities. From that we are going to deduct the outflows for making the inflows, and the resultant figure we call it as a net cash flows from operating activities. Then the second one is investing activities. What is the amount that is invested in the assets? What is the result of the investing activities of the organization? That is, what is the inflows and outflows with regard to the investment activities will also be identified or will be projected in the cash flow statement. And lastly, financing activities. What is the resulting, what are the activities which result in the cash flows with regard to financing? The financing may be with regard to the raising of finances from the equity, debentures, that is ownership securities or debt securities, and what is the inflows and what is the outflows, that will also be given a detailed item wise in the cash flow statement. On the whole, in a cash flow statement, there are three different activities from where we need to identify the inflows and outflows, and the net figures of these three will be the resultant net cash flows of the organization. Then what are the advantages of cash flow statement? Helps to evaluate the current cash position. As we know that the cash flow statement gives you the exact picture about the various inflows and outflows. This will help us to evaluate what is the current cash position, what is the, whether it has got deficit, what is the exact cash that is available in the organization can be known by preparing the cash flow statement. Projected cash flow helps to know the future cash position, as the cash flow statement which is prepared will help us to project what will be the requirement of the cash in the coming future, which will help the management to take the decisions accordingly and make arrangements for the future requirements of the cash flows. The third one is it helps in taking loan from banks and other financial institutions, as the cash flow statements well in advance gives you the exact picture about what are all the various cash inflows and outflows that of the organization, and what is the net cash flows that are available. It will help us to predict well in advance what are the future requirements of the cash, whereby it will help us to make advance arrangements for the future cash flows, because the planning about the cash requirements and making arrangement about where are the sources from which the funds can be raised, if planned well in advance, it will help the organization to find out the sources where there is a least cost or cheaper source of available cash resources will be identified. This is the another advantage of cash flow statement. The next one is helps the management in taking short term financial decision. So it will help the management in taking a wise decisions with regard to short term liquidity position of the organization. Statement explains the causes for poor cash position, as it clearly gives us the inflows and outflows. One can compare where or what is the result, what is the major reasons for the decrease in the net cash flows that are available, wherein the basis for this will result in identify the exact reason which can be corrected or which can be where the remedies can be taken by the management in correcting the correct or required cash position of the organization. So these are the various advantages which can be reaped by preparing the cash flow statement. The next one is disadvantages of cash flow statement. Though the cash flows provides us the major advantages, it also suffers from some limitations or loopholes. Let us have a look on those things. It ignores non-cash transaction. As we know that the cash flow statement is purely based on cash basis, that is only the items or the transactions which are of cash in nature will only be taken into account, but whereas there are other items which are not in cash but also have major impact in projecting the position of the organization is not taken into account. So this is one of the drawback or limitation of cash flow statement. Not suitable for income statement, as we know that income statement is based on the accrual concept, wherein both received and to be received will be considered, and here only cash is considered. It will not give you the exact picture about the income of the organization. The third one is cash flow statement gives only a narrow picture of the working capital as compared to fund flow statement. Here the cash flow statement gives you only a partial picture, as it does not take into consideration the other than cash items. It is not going to provide you detailed picture when compared to the fund flow statement with regard to the working capital management aspect. So this is what about the cash flow statement. It's what are the various things that are included in the preparation of the cash flow statement, what are the advantages and disadvantages. Now let us move on to the next topic, next item of the topic, today's topic, that is fund flow statement. So fund flow statement indicates the amount of change in the various balance sheet items between two accounting dates. Here the fund flow statement, the fund means working capital. There are different items which we need to understand here. Gross working capital, net working capital. Gross working capital represents the current assets of the organization, whereas the net working capital is the excess of current assets over current liabilities. That is, the current assets minus current liabilities will result in the net working capital, whereas the gross working capital is represented with the total of current assets of the organization. And here, in order to prepare a fund flow statement, we take two different dates balance sheets and compare the items of the balance sheet of these two dates. It shows the sources and use of funds during an accounting period. Here where got, where gone. The fund flow statement is also called with the other name where got, where gone. That is, from where we have received the sources and where these sources are spended, where these sources are spent. It gives you a detailed picture about these sources and uses of funds. In other words, it is a statement that shows how the funds are obtained and how they are put into use. Here the fund flow statement will give you a analysis or insights into the efficiency of the management, that is, how best the management is able to utilize the sources that are raised or that are available effectively, so that it will reap the maximum benefit to the organization. Here we can say that the fund flow statement is like a mirror for the management's efficiency. Then what are the different steps that are followed in the preparation of fund flow statement? Herein we are going to proceed with three stages in the preparation of fund flow statement. First thing is, we need to prepare a statement of changes in the working capital. Here statement of changes in the working capital takes the information from the two balance sheet dates, wherein whether there is increase in the working capital or decrease in the working capital when compared to one period to another period will be taken into account. As I said earlier, that working capital is nothing but, again we are going to consider the current assets and current liabilities. That is, we are going to take into account the total current assets and the element wise current assets and current liabilities of the two dates, and we compare whether there is absolute change in percentage, that is, whether there is a change, increase or decrease will be identified at the end result of this statement. That is, the statement of changes in the working capital will either result in increase in working capital or decrease in working capital. And after preparing this statement, we need to prepare adjusted profit and loss account, wherein we use funds from operations or funds lost in operation. That is, we will come to know whether there is a profit or loss from operations of the organization. Again, here we are going to consider only the aspects relating to the operations of the organization, that is a regular course or general course of action, whether the operations of the business concern has resulted in profit or loss will be identified by preparing the adjusted profit and loss account. And after doing so, a fund flow statement is prepared wherein it gives you the detailed picture about the sources of funds and its application of funds. So here the fund flow statement gives you a detailed information, or it will give you a glance, at a glance, what are the various sources from which the organization has raised the funds and to what they have spent, or the way in which they have spent these available funds will be known by looking at fund flow statement. So this is what about the fund flow statement preparation. Then we'll move on to the different advantages of fund flow statement. The first one is helps in knowing the sources and uses of fund. As we discussed earlier, that a fund flow statement will present you the sources and its utilization. Here, by looking at the fund flow statement, a layman will also be able to understand what are the various sources from which the funds are raised, or from where the sources the funds are taken, that is raised by the organization, and how they are used in the organization. Helps in improving working capital position, as one of the part of the fund flow statement is to know the changes in the working capital. It will help the management in improving the working capital position, as the working capital management is very important for an organization, as it has major impact on day-to-day activities of the business. If the working capital management is not properly emphasized or is not taken into account, then generally the general course of action of the business is hampered, which result in the organization going into losses. The next one is helps in assessing the efficiency of the management. As we have discussed in detail, that the fund flow statement is a mirror wherein it will project the efficiency of the management, that is how best the management is able to make use of the available funds. The fund flow statement will help to assess or measure the efficiency of the management. Helps in planning investment of funds, where the best where are the investing avenues which will help the management to reap more benefit or increase their profitability condition will be known by looking at fund flow statement. It shows the relationship between working capital and net income. So what is the relationship that exists between these two figures, that is working capital and net income, will be established with the help of fund flow statement, as there is a link between changes in the working capital and the funds from operations. Lastly, it evaluates post financial performance. So it will help us to analyze or evaluate the performance, financial performance of the organization. So these are the different advantages of fund flow statement. Then the next one is disadvantages. It ignores the non-fund items. So only fund items are taken into account. Non-fund items, the items or the transactions which does not affect any movement of fund, is not taken into account. It is not original but just a systematic rearrangements of funds. So there is other drawback. There is a critic that the fund flow statement is that just a rearrangement of the items or funds that are available in the organization. Fund flow statement is basically historical in nature, as it takes into account only the past information. It also as a drawback of historical in nature, as it is not a planning of future, it is only a post mortem of what that happened earlier. So these are the different advantages of fund flow, disadvantages of fund flow statement. Now let us have a comparison between cash flow statement and fund flow statement. Cash flow statement shows causes for changes in the cash. As it is focused on the cash, it shows us what are the reasons for the changes in the cash position of the organization, whereas a fund flow statement shows causes of changes in the net working capital. Because a statement of changes in the working capital is prepared, it will give you a detailed picture what is the impact or what are the various reasons because of which there is a change in the net working capital. Starts with opening and closing balance of cash. Always the cash flow statements begin with the opening and ends with the closing balances, whereas the fund flow statement does not have any opening or closing balances. Deals with only cash. The cash flow statement, as it is based on the as it is related to only cash, it only takes into account cash items, whereas fund flow statement deals with all components of working capital. That is, it deals with the current assets and current liabilities. Useful for short term financing. The cash flow statement is much useful for short term financing, whereas fund flow statement is useful for long term financing. Cash flow statement is based on the cash basis of accounting, whereas the fund flow statement is based on the accrual basis of accounting. Cash flow statement improvement in cash flow can be taken as an indicator of improved working capital position. Here, whenever there is a improvement in the cash flow, we can take as it is an indicator for improved working capital position. Here, with regard to fund flow statement, sound fund position may not necessarily mean sound cash position. That is, if a firm has a very sound position, it doesn't fund position, it may not judge or it may not guarantee that it is not necessarily that sound, it has even the sound cash position. So these are the different way distinction between the cash flow statement and fund flow statement. However, though each one of them has got its own advantages and limitations, but for analyzing or for having a full insights into an organization or a business firm, certainly an analyst will look into the cash flow statement and fund flow statement apart from looking at the balance sheet. Definitely these two will guide or give you more meaningful information for analyzing the financial position of an organization. So thank you for the day. Thank you.